Hello traders, it's 8:01 a.m. Chicago time on Wednesday, the 21st of February 2018. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're seeing a mixed market. Overall, equities are just slightly up across the board. NASDAQ leading the pack, up 27 points, 0.41%, followed by the Russell. We're seeing both treasuries and equities on the positive side from prior settlement, but we also are seeing other equities that are on the downside. The Eurozone index, the Euro Stoxx 50 is down, the DAX is down 69.5 points, or 0.5%, more than 0.5%, and so on. So what we have today is a pretty mixed bag coming into the session. Looking ahead of us, we do have some numbers at 9:45 Eastern and 10 o'clock. We also have a Fed speaker at well, actually, that's already behind us. We have the FOMC minutes, which the market is paying very particular attention to. Interest rates are front and center right now, so that's going to have an impact, in my opinion. So 2 o'clock Eastern, 1 Central. We need to pay attention again. 9:45 and 10 o'clock. We may have some numbers that might move us. Let's take a look at yesterday's action and what we expected. There we go. So yesterday, the primary idea, scenario, the expectation based on how we were positioned overnight, my expectation was we would take out the overnight low. At the time of the trader bite, the overnight session, the overnight trading was right under the point of control, the overnight point of control, and right under the mid. Had made a low and had pulled back to those, and the expectation was it would would likely extend lower before responsive buyers step in. The inventory overnight was almost completely short. Once we bottom out, which I was expecting at about 2700, 2702, we would look for an impulse back up into the prior day's range to value low or the close at 2732 or so. That did not happen, so this did not play out at all. The secondary scenario, we become responsive early on, choppy open. We become responsive. We push back into the prior day's range. And in that situation, I was looking for a test to value low at about 2732. And then the secondary scenario is that we fall out of the range. The third scenario was basically the same, but then it just pushes through. It pulls up to the value low, and then it pushes to the point of control, 2740. So those are the three main scenarios. I put two of them on the same slide here. What we got was scenario 2 and 3. 3 could not get to the point of control, so we ended up getting scenario 2, which was to push up and sell off, but it did not happen until we got close to the point of control. The market tended to push higher than expected. Here's what we saw. Throat's scratchy this morning. Let me switch to periodicity for this. This is what we saw yesterday. Okay. Get rid of this. What we no, that's not what we saw. We saw a push up. Fresh start. Ding, ding. So we ended up opening a lot higher than where we were at the trader bite. So at this point, based on where we opened, we had already pushed through. So this was right after the trader bite was over. We had pushed through the overnight point of control and the overnight mid. And we immediately started to push, be responsive to the prior day's range. On the open, we pushed right to value low, right here at 27.32, and it looked like scenario 2 was in play here. So if you recall, scenario 2 was to come up from 27.16, push up to value low, move down, consolidate, and then push lower. So it was between scenario 2 and 3, given the way we opened. Tough call, and of course some losses because it's in between. We ended up balancing a whole lot here. If you look at the profile up to this point, you'll see that it was just very, very stocky. See that profile, just very fat. Given the open had a drive-ish behavior to it. And so the expectation was we would just continue to the point of control. That's really what I was looking for until it started to fail back into the prior day's low. The prior day's low is this green line right here. And so we end up pushing back over, and then we get this impulse back up. So we move from 27.19 to 27.34 in basically one move. It's broken up here because of the way the zigzag indicator is computing. But we end up with an impulse up. And right there, I start gunning for scenario 3. Right? So scenario 3, as soon as we see this starting to push up, scenario 3 is looking for a pullback and then targeting VPOC. Okay, 27.40.50 was the target for scenario 3. Once we get to 27.40.50, I expect the market to consolidate through lunch, and then the expectation becomes a push into value high because the prior day was balanced. We hold VPOC. If we hold VPOC rather than rejecting it, the probability is on the side of testing value high. So that's basically what I was gunning for. The opportunity to do so was right here. Pull back to VWAP and mid inside a range, and I got two scales before it started to crap on over, and then from this point on, it fell back out of the range. We have a range extension down. The thing supporting this as well is that the thing we supporting this this thesis that we would likely continue higher is we had a range extension up. So these yellow lines, for those who don't know, these yellow lines are the initial balance. That's the high, that's the very high and the very low of the first hour of trading. And the theory behind that, and if you put those on your chart, you'll see that the market responds to these quite a bit. In fact, we saw that here, saw that here. That's why you scale out ahead of the IB high. That's the second scale. Once we extend these up, we have what's called range extension up. So what we're showing in this situation is that we put the initial balance in, we tested down, we failed to hold below the initial balance, and we push up. This, to me, is a very high probability play for the point of control, which did not work out, right? We stopped 3 points short of the point of control. Once we test the initial balance and we break to the other side, it is rare that we end up coming back to the initial break of the initial balance. This is a rare situation here, a relatively rare situation. I think I haven't studied this in about 3 years, but the probability of this occurring is around 18%. The last time I did this test, which I think will probably be too low in this environment. But that's what we have here, where the market breaks one side, breaks the other side for a neutral day, right? For neutral day, and then ends up breaking the initial side again. And then what we had yesterday was somewhat of a neutral extreme day down. Okay, so these are the weird behaviors that I'm seeing right here. We had a neutral extreme day down. We're finishing outside of the IB on a neutral day. The point of control did not move down, which would have helped the cause here. And then the expectation overnight is a lower overnight low. We expect that 2705.75 to be pushed lower, and it didn't. We actually held 2 ticks higher in the overnight session above the day session. So we were not able to extend this down. So despite the effort that was made here to squeeze to 2705.75 to hold the IB, this was another setup right here, IB low in the direction of the second break below mid. The expectation is it would continue. It's likely to continue lower. It did not. There was an 8-point rotation here, which was pretty good, but it's expected to trickle down into the overnight session at some point, which it didn't do. So we're holding in we're holding in this pattern here in the overnight session with a very compressed session. So again, all of this is predicated on a very balanced prior day. So we pushed the 2754.75 high on Friday. We put in a Gaussian profile. We put in a very clear point of control. And so the expectation is we're likely to test that entire value range from Friday. This gray area from Friday is likely to be tested. Now, these are probabilities. Remember, probabilities are historical. Doesn't mean it'll continue. It'll happen the next time it occurs, right? The probability of something, the outcome of the very next thing is always 50-50, and it just happened to be so for yesterday. Here's what happened overnight. We open right up, test down, and then buyers step right in. We push back towards the IB. We hit the mid to the tick from the prior session, and there's the selling, and it just stops dead in its tracks. It's very bizarre looking move here, this V bottom that was put in the overnight session, and then it swings all the way back up, almost completely taking back the sell-off. So this, again, this is another opportunity for it to pull back and for us to get the range extension that we would expect based on a neutral day down, almost a neutral extreme down. We would expect, I would be, if I wasn't here when the European markets open, but I would be hammering on the short side and losing on this. And so it pushes all the way back through and then all the way back down, again retesting that low but not taking it out. We consolidate for a while and we're just floating up. To me, the overnight session is not indicating anything other than both participants are testing the entire range pretty thoroughly. Look at the volume at every price. The volume per price shows there's a relatively conscious effort here by both participants to battle across the entire range, and there's a lot of fighting going on in the overnight session with some pretty decent swings. So the overnight session is 15 points deep, which is it's just shrinking from day to day to day now as volatility drops. The VIX is at about 20 from where it was a couple of weeks ago. It's about a third of where it was. And so overall, things are calming down. But this overnight session is indicating one clear thing. The biggest takeaway from the overnight session is that it could not take out the LVN and the mid of the prior day. Okay, so we're staying below. We're staying below Friday's low, and we are trading. Some people are seeing this as value, but it's not. The buyers are not able to get it up into above 27.20 and hold, and we're fighting down here. So it's showing a little bit of weakness is showing a little bit of weakness here, and that's what we're coming into the session with. Okay, this today's one of the things I wanted to cover, because we need to look at the big picture periodically. I want to make sure we keep an eye out for our weekly profile. Look at the range there on the week of the 5th. Boom. Huge. Just a huge range there. 6, 7 sigma, something like that. And then it shrunk last week to about 60% of the prior week. And then yesterday it's up here. So we are, again, one-time framing up so far, and we'll continue to one-time frame up as long as we don't take out that 2618 area, which is about 100 points away. But overall, the market is recovering from that shock, that sell-off shock, and I think everybody's just continuing to keep an eye on interest rates. There's a discord between interest rates and gold. Right now, there's some strange action going on there, but the market is still tentative, but participants are still coming in and exploring both sides, which is good for us. So overall, we are holding in the upper range. We're close to all-time highs. Do not be shocked if we start to walk up to all-time highs again. But overall, we're holding steady above the sell-off weeks. The sell-off weeks point of control down here. So this is a short squeeze. We're in a resting period of a short squeeze, which occurred last week. Okay, so that's the bigger picture. Today we're looking at an open in range out of value. Prior day's value is fairly clear. We had two distributions yesterday. 27.21 continues to be key here. The overnight high is going to be the over-under line for this session. The expectation this morning is an open auction, a fairly noisy opening swing, in my opinion. And then I expect it to respond downwards, and I'm looking for this to regain the 21 early on. Again, I'm looking for a responsive action. Now, we have lower highs now and lower lows. Where's the low of that day? The low is at the open. So lower lows. So the price action is in this direction. So, but still, there's a lot of room for this to move up, and I'm expecting it to push into the prior day's value and continue to test this overall channel. That's my primary expectation today. So I know that locks me into a bias, right? But I have to have a bias to put on a position that that's more than a one lot, let's say. So in order for me to be committed, I got to have a bias. So overall, that's the expectation on the primary scenario. The secondary scenario is if we push into the prior day's high, or the overnight high in the prior day's mid, and fail back through the opening swing, then I'm looking for it to pull back up into the low volume node, into the mid, and then attempt to continue down. And if it does continue down, what's my next stock zone? 2705. So we hit 2705 yesterday. The next area is 2696. So down here, this is not so likely, but if we continue to hold this pattern, then we're likely to go sideways, and then later in the session start spilling over and retesting some of this V-bottom action that we have here. We have a bunch of V-bottoms going down the chart in the past. Okay, so this is where we stand on the primary and secondary hypothesis. Again, that's how things look. Not sure why this looks like this, but let's see if we can fix that. There we go. So why am I bringing this up? I'm bringing this up to show you that there's a relatively strong imbalance in the book right now. The market has been holding a big offer throughout the overnight session. So since about 5 a.m. or something, my time, Chicago time, the market's been holding a pretty strong offer. So you see this bleeding section up here, and the order's imbalanced by 24%. The order book's imbalanced by 24%, and it just keeps, as it pushes up, it's getting redder and redder. This is what I look for, but after the open. So after the open, I'm looking for, does this get thicker? Does it get more bloody as price moves to it? And that for me would trigger the trade short and to play the short scenario. Okay. Excuse me. So that's an example of how I would stock the opposing biases. And then from there, I look back at my main screen and look for the next areas, the flex levels or next areas that I would be engaging in or targeting. Okay, so that's how I'm approaching things. Good luck today. That's it for today's session. Take care.